All right. Well, let's go ahead and get started. To be respectful of everybody's time and appreciation for being here. So I'm Roni Haskell, realtor out of Charleston, Summerville, South Carolina, kind of covering the low country of our beautiful city of Charleston, historical in nature and really a strong economic reach for a lot of industries and different businesses that bring people in. But real estate, while it's very localized, what happens in our area, it also trends can happen nationwide. And so I have pulled Kellie Collins, a great friend of mine. Thanks for being here, Kellie.
So happy to be here. Thanks for having me.
Well, you're welcome. You're an expert in the industry of mortgages. So I can't do what I do every day at a high level of selling and buying, but without a partner like you, because just like what we had experienced this morning, we've got a mutual client. They came to me to purchase, and I said, well, first you've got to get your pre-approval. Do you know of somebody that you know, like, and trust? And she said, no, please make an introduction. So I'm happy to do that when the opportunity presents itself, because buyers have got to be well equipped. And so that's where you come in, and you're a big player in knowing not just how to get somebody pre-qualified, but we know from a buying perspective, like, getting under contract is easy, but getting to the closing table sometimes can be a challenge. And to mitigate any disappointments that might happen, I always like to start with get your approval, know where you stand, and then let's go searching for the right house. So that's why we have you.
And I couldn't agree more. And I'm honored to be a part of that process with you and everybody on your team.
Thanks so much. So as we seek to bring a wealth of information to the public, education, I say knowledge is powerful. It really is. So you've got to equip yourself to know, why should I buy, and when is the right time to buy, and then what does the process of buying look like? It eases people's nerves, and it also puts them into a better place. So I'm going to go ahead and let you screen share the presentation that you've got and get us started, Kellie.
Perfect. Did this one successfully. Let's make sure it's working again. All right. Can you see the screen?
Yep, I can see it.
Perfect. All right. So
let me just jump in 1 second, not to interrupt you, but if you have any questions for the viewers, make sure you pop those into the comments section. We've got this presentation set up to where we don't have audio for all of our visitors, but pop it into the comments if you're watching us live. If you're watching us on YouTube, where we will house this following the presentation here, drop us a note and let us know if you have any questions, and that way we can reach back out to you and make sure that that you have your questions answered. All right, go ahead, Kellie.
All right. So in today's market, there's a lot of questions and everything. So I have been in the real estate industry for over 20 years. And right now there are more questions about just all of it than there have ever been. So we've put together this presentation to help everyone understand, and especially our clients, we want you to be fully equipped. So that's what we're here to do. And then of course, you know, Roni and we are here to work as a team to help everybody, but let's dive in. So right now you see on my screen, there is a post that was pulled. I think this one may have been from Twitter or something, but there's a lot of wrong things in this post. And so, but it's worth going through and just seeing that the narrative in the mainstream media may not always be accurate, because a lot of times it's just there to get people to click and interact. So yes, Fannie Mae Home Sentiment reported that 83% of Americans polled said this is not a good time to buy a house. But if you zoom out, you really realize people always say they wish they would have bought sooner after they bought the home. So basically what we want to do is help homeowners think in terms of decades, not in terms of 1 or 2 years here. And that is what our chart is right next to it. So you have people thinking that it's a bad time to buy a house. And in 2020, when rates were in the twos, people did not, that wasn't the best time to buy a house. 30% of people thought it was still a bad time to buy a house. So why would that be? Probably a lot of the mainstream media saying, hold on, don't buy a house. So mortgage demand hit a 30-year low in the last quarter of last year because of rates. And yes, rates are not great, but the truth is that affordability has actually gotten better. And the reason for that is we are in a great jobs market still, which is one of the reasons for the higher rates. And that job market is your affordability, really the percentage of your income now from where it was 5 years ago is so much better. And a percentage of that going towards housing is actually typically less even at today's rates. So just keep that in mind.
Just so I understand, so unemployment's low, people are being compensated more for their jobs, correct? So they're making more income. Are you seeing that people are carrying a lot of debt?
There are a lot of people carrying a lot of debt. The average household right now, I think the CoreLogic may have put out the last research. The average household has about $25,000 in credit card debt, and there's some that have higher debt, and there are still people that have no debt. But yes, the average household is carrying more debt than before, and we're in an all-time low savings.
Yeah, so new home, and I know you're going to touch on how to bulletproof as a buyer. If your intent is to buy, I just want to kind of point out that it even though income has increased, people are still, sometimes they spend more than they should be, and they're building up this debt. So number one, make sure that you're saving some money in all of this too. So it doesn't matter what time, whether it's a good market, bad market, you know, it's inevitable, always a good idea to save as your income increases. Try to save a little bit and live within the means. Just thought I'd throw that out there based on some experiences we've had.
Yes, always living within your means makes everything easier.
Yes.
So this is a challenging buyer market according to a lot of people, but that's why we created this Bulletproof Buyer presentation. So so how do you become this bulletproof buyer? And so one, we're going to talk about a comprehensive market analysis. Why now's a good time to buy, wanting you to understand what's going on in the market and how it's different from this crash that a lot of people are saying we're in a bubble now. We're going to go over that. The 40 steps to a flawless home purchase. Number 3 is getting a fully underwritten approval so that you can compete with cash offers because you know that you've already been through underwriting. We've taken the guesswork out of that for the sellers. And then finding ways to overcome possible pitfalls. You could be fully approved and the home doesn't appraise. We have strategies to help you, and we want you to understand those so that you have confidence when you go into any situation. So that's what we're going to talk about today. So first up, did you know buying a house is pretty much always a winning situation? So going back to 1942, home prices have moved higher 74 years since 1942. 7 of those years have been down years, and 1 year has been a flat year where no home has appreciated. That means residential real estate has a 90% win rate in the asset class. Real estate is an asset that is used to build wealth for your family. And so regardless of interest rates, throughout the elevated rate periods, like the 70s and 80s, and we're talking in the teens rates were, homes have still continued to appreciate. Think in terms of decades, how you're going to build this wealth, return on your investment, instead of just thinking in a year or two. You're not going to stay in a home. Most people are not going to stay in a home just a year or two. Anything to add there, Roni?
Well, just in looking at the interest rates, the percentage of gain in equity, or the appreciation of the property, let's put it that way, still happens even when interest rates are elevated. So, not to age myself, but I did come into residential real estate in 2002. And you can see in those early 2000s, interest rates were well into the high sixes, even touching, 7-8%. So interest rates are not a scary thing for me, because I have been through the cycle of that market where I couldn't write contracts fast enough. I was in a new construction setting, and every single one of those property owners that I sold to in the early 2000s have made incredible gain on those investments, and yet they were still paying 6-7%. So that's a fearful thing, because we are coming out of a market where people were in the low interest rates of 2-3%, right? And so that's fresh in our minds. However, look at this charting. You can see that even last year, when interest rates did peak up to touching that 7% mark on average, the equity still increased. We did not lose. Overall, our market did not lose equity. So it's just an interesting thing, and kind of overcome the fear and the cloud that the media does put into, interest rates have gone up and the property values will not.
Exactly.
Okay, that was all.
So basically what we're going to talk about next is, a lot of people are saying that right now our market is very much like the 2007, 2011 area. We're going to go over why it's not. So this cycle is nothing like that last cycle. So the reasons are, our last cycle had a 10% unemployment rate. Our current unemployment rate is 3.7%. So people have jobs. Total jobs were 138 million versus 161 million jobs available right now. Subprime loans. These are the loans where basically you could walk into any lending establishment, you fog the mirror and could sign a name, you could get a loan. Today, they're not like that. We make sure you qualify for the home, and it's been like that since 2008. So we're not going to have people who can't afford homes coming out of the market here soon. So 5-year cumulative new home construction. So new construction was booming in the last home cycle, and they built over 7 million homes. Right now, they are building 3 million less homes a year. So 40% less. Inventory on the market, we had 4 million homes on the market last cycle. There's less than 1 million homes on the market now, 80% less inventory available. Mortgage delinquency. Because again of the subprime loans, people buying homes they couldn't afford, delinquency was at a 10% rate. 10% of all loans were delinquent. Right now we're at 2.1. That is a hugely healthy number. Homes in foreclosure, 4.6%. And now we are at 1% of homes heading towards foreclosure.
And I'll add, these are national statistics, but I'll tell you, our local Charleston market is 0.02% are in foreclosure or short sale, a hardship kind of situation. So that is nothing in the grand scheme of things. And I've lived through those big foreclosure and short sales, learned that business real well back in 08, 09, but that is not happening in our market right now.
Yeah, Absolutely. And if you want any of the sources for this, reach out. We'll send you the sources so you can do your own research as well. And then, so what is driving the housing market? So basically, why do people buy homes? Because there's forming a new household. And so back in, so let's talk about home shortages. So Roe versus Wade in 1973 came out that affected actually new household formations. It affected the population with birth control contraceptives and things like that. So prior to 2008, there were far more new homes constructed than new households being formed because the population didn't grow 30 years prior at the same rate. Because we are in a 30-year cycle. 30 is kind of when everybody starts buying homes. So you see 2004, you're about even. So the builders are like, oh my goodness, we're so busy. We've got to build more homes. I was in new construction then too. And so we were building like crazy. People were coming in the door. You couldn't write contracts fast enough. And then all of a sudden, the new household formations cut to almost half of where they were in 2006. Home builders didn't pay attention and they continued to build homes at the record pace. So then it dropped again and again. And now we're at low household formations because of the drop in the baby boom 30 years earlier. And builders didn't catch up to slow the supply till 2010. And so what that did is we had surplus of homes and no demand. So a housing market is all about supply and demand. And so the higher the supply and the lower the demand, the lower the price. And so what contributed to what happened back then. And again, with the subprime loans and everything as well. So now then started catching up again, and our population started growing, new household formations started growing again, and we started outpacing. We went through all the inventory by 2014 to 2016, and now home builders can't keep up with all of the home formations. And the stats haven't come out for 2023, but the estimated new home formations in 2003 is close to about 25% of what the builders are able to keep up with new homes and completions. So this is why we are not anywhere near the old market, and why appreciation is continuing to grow. So now we're going to talk about inventory. So this is on a nationwide level. So a healthy market is estimated about 6 months supply. We have not been in a 6-month supply market in quite some time. And actually when in 2021, rates were about 3.5-ish, we were in a 1 to 2 month market supply of homes. And then it kind of bumps up just a little bit and comes back down. And so this is why now's a great time to buy. If you find your home, don't wait for the market to crash, because we don't have enough homes to meet that supply. There's going to be somebody else who wants that same home. Anything now there, Roni?
No, I think that, when the media talks about it now being a buyer's market really puts us into that realm of having about 6 months of inventory. It puts us with having a house on the market for about 90 days. That's a buyer's market. That's kind of a midline, meaning that it's the buyer's advantage, right? They have a lot of inventory to pick from, and the house has been sitting for a bit, and the seller's willing to give a lot of concessions. In the last couple of years, we've been really in 2020, 2021, 2022, it was very much a seller's market, as you were indicating, low inventory, right? Short days on the market. Everybody was flocking to buy the same house as the day that it would hit the market. I know because I had a listing that had 15 offers on it. I had to strategically change my actions. So we've operated in a buyer's market. We've operated in a seller's market. I would say today's market, we're more or less normalizing. And we're kind of tipping back up into that about, 2.5. I think we will this spring with new listings. I think we'll even tip into that 3 month supply, perhaps. That's a good, healthy market, but it's a balance with the amount of buyers that we have on the market as well. People are able to negotiate a bit. They're able to get what they want. So we've talked about the market conditions, what things have been, and why it's still a good time to buy right now. Listen, if interest rates were down at 3%, guess what? You as a buyer would be paying anywhere from several thousand to $100,000 over its list price. Because when interest rates dipped, inventory dipped, everybody was buying and everybody was competitive. So people were paying a lot. That's a really aggressive market for a buyer to try to play in. I once had a buyer that was trying to buy in Mount Pleasant, and I said, you got to give me all your cards up front, right? Give me everything that you've got in your name, and then I'll go and lay it on the table and try to present it to the seller to convince them. I mean, we were dealing some crazy stuff when interest rates were that low. Thank goodness we're not operating in that era right now. You have inventory to pick from, and interest rates, even though they're a tad high than years past, I do think that it's a more healthy market for us to be operating in.
Yes. So as we are in this healthy market, we're going to skip over cash buyer and move on to the fun stuff. So as we are in this healthy market, you need to be ready. And this is where we start our 40 steps to a flawless home purchase.
Yeah, and it's really where your realtor, Kellie does a fantastic job with getting you financially ready to, whether it's clearing up some flaws on your credit report, paying off, if you sell a house and you've got, say you're able to walk away having $50,000 in profit from your home sale, or maybe you've been very diligent and you've been saving $50,000 in order to purchase your first home. Where do you allocate that money? Do you pay off debt? How do you strategically do that? That's Kellie's wheelhouse, and she does an awesome job of education and sharing insight and information, doing side-by-side comparisons. That's what she does at a high level. When it comes to purchasing the home, your real estate professional is going to help guide you through the process. It's communication from the very first time that we meet you, and we talk about that communication and having open lines, being very transparent about what are your goals, what are your time frame, what are your needs. And sometimes we have to keep revisiting what those goals and needs are with our clients that are buying, because they can get caught up very quickly in the feel of a community that's maybe they fell in love with it, but it's on the wrong side of town from where they're working, right? And so we have to be very clear on where the goals are, what their priorities are. We meet with Kellie, make sure we're financially set, and then we start the process of looking, educating on, are amenities important, scheduling showings, narrowing down the sector of town that best suits you. And it's easy to put a house under contract. It is very diligent. The best agents that are out there are going to be very communicative and structured on how to get you from contract to close. And this really gives a breakdown of what that looks like behind the scenes. A lot of communication with other agents, a lot of communication with the attorneys, contractors, right? Like all of these people that are comprised to get you smoothly and an enjoyable experience and a successful closing, so that when we sit at that closing table, hopefully you will look at your real estate professional. If it's in Charleston, we'd love to have that honor of serving as that, but you look at them and say, job well done. This was an enjoyable experience, and I'm proud of the purchase that I have just made. That's the goal here, but it takes a lot of steps of coordination and communication with a lot of different people. And so that shows a little snippet of what we do as real estate professionals.
Yeah, that's only 40 out of what, the 382 that y'all do from the
It's
process?
a lot. It's a lot. And, as we start talking about commissions and earning commissions and what our value is, that's a topic for a different conversation and presentation perhaps. But I can assure you there's a big difference between somebody that is uneducated and they've just gotten their license, but they're really not experienced in the realm of transacting real estate, and somebody that is well experienced, has had some bumps along the way, has had some learning opportunities, so that you don't have to experience those complications. We try to do a great job of safeguarding. It's an emotional experience, but it's very detailed, that focus that we have to be with our clients. And so it should be enjoyable. That's our goal each and every time. So perfect home buying process. We've talked about the initial consult and what that's going to sound like, just a bit of what's important to you. What are your ideal closing dates, timeframes, who's going to be living in the house? And then contacting the lender, we talked about that. That is an instrumental, do not pass go kind of step to take. We do not want to go start showing properties to you, allowing you to fall in love with something that is not going to be comfortable financially for you. And then defining the home buying goals and home search criteria. We like to be very specific. It's said that an average home buyer looks at 7 homes and makes a decision. Don't get me wrong. We've had home buyers look at lots, let's say 50, 60 homes. It's just indicative of me maybe not doing the best conversations up front as a leader and a guider of the conversation to make sure that I know your goals, your area of town and such. So we don't want to showcase 100 properties, because in the end of the day, 100 properties are probably not going to be in the right search criteria for you. So we want to do a great job of showing you the homes that are going to interest you the most. We go and view homes, select it, get to the contract. Listen, the good negotiator is going to seek your highest interest, and then partner with the lender, Kelly in my case, oftentimes, to learn, do we need to negotiate closing cost? Because we can. Do we need to negotiate a specific closing date? Because job transfers or different things have led us to where we need to make sure that a specific closing date is met. So we can do that on the front end. And then again, getting through the inspections, communications, lining you up with a closing attorney who works really hard on the paperwork side, and then ultimately to the closing table.
There's so much that goes in there. So we are glad to be a small part of that, and how we help basically everybody become that bulletproof buyer is, one, we have the option to help you compete. So 34% of homes nationally are sold in all cash.
It's true. We're seeing it big time. People have more money. They have more wealth in real estate than they've ever had. And so what that lends is people being worried that they may not be able to compete. So thank you for bringing this up. This is huge.
Yeah. So how do we compete with that? One of the ways is to get fully underwritten before you find the house. Let's collect every document we can, answer all the questions, let an underwriter see everything, so that when you are competing with 5 other people, and let's say you've got a cash offer in there and a few pre-qualification letters and stuff, and you go in and you have a pre-approval that has already been underwritten, you're going to stand out, because that's unique. And then when I call and confirm with the listing agent, I've seen everything. I'm just waiting on the appraisal. So this is an option for you to make it a lot more competitive. And we'll do it at all the interest rates and make sure that you stay that way. So requirements, we do ask that you are actively making offers within 60 days, which most people, once they see me, we talk numbers, you're so excited. I give Roni and her team the green light. They are finding you that house. So we're going to get you ready quick. And then be ready to provide all documentation. I'm going to ask for everything. Know that I'm not picking on you. I ask for this, people, everything too. But that is how we do business these days. And then you have to have a signed buyer's representation agreement because you need to know who's representing you and what that looks like as well. And Roni and her team are amazing at that too.
That buyer representation is with your licensed real estate professional.
Yes.
Yep.
So then we talk about just strategies. So I love my strategies. And if you come to me and ask me just one question, I need to know more so that I can help you figure that out. So one way you can win an offer is an appraisal gap strategy. So what if an appraisal starts coming in low? We have had a couple of these happen in the past 2 weeks, and it just happens every now and then. So if you have money to put down, like Roni mentioned earlier, you're thinking about buying a house or just in general, save money. The more money you have stocked away, the more options you have when it comes to this. And if you need to waive an appraisal or something, and we can all work that through and create that strategy for you where it works, or if an appraisal just comes in 15,000 low, and we can just move your numbers around and make it work for you, then we will. So let's look at a situation that we did that in. So I had a client looking at $800,000 house. They were putting 20% down because nobody wants some mortgage insurance. But the home came in at $725,000. So what we have to do is make an adjustment. The seller was like, nope, I'm not coming in. I'll go find me a cash buyer. And the buyers, they wanted this house. So what we did is we changed the loan amount, changed the down payment. And you can see that with interest rate and everything staying the same, the monthly payment changed $41 a month. And the cash to close changed $200 a month. It's just a different way of looking at it. And I got this loan because another lender told this client, so you have to bring in that, you want this house, you have to bring an extra $75,000 to closing.
Yeah. So really when an appraisal comes in what we call short, the buyer can either make up the difference between the contract price and the appraised price. The seller can come down in value. We can negotiate between the parties to find some middle ground. Maybe both sides throw a little bit, in. The seller gives up some. The buyer's willing to bring a little bit of more cash to closing. Or we can, Kelly can run your numbers and see what's comfortable for you. And doing side-by-side comparisons is instrumental. Again, the concept of knowledge is power is absolutely key to be able to see, okay, well, if I bring this much to closing, this is what it's going to look like. Rolling it into the loan or different things, different strategies. And that's why she says she's very proud of her. She has tools to be able to show you why her strategies matter. So it really is key on that. Thank you.
And then we can look at equity home shot. This is the same scenario. Appreciation was going to be the same, principal paid about the same. The total equity was going to be $1,000 more after 10 years than the other option. So this was a win-win scenario for everybody. And now, what if you're going against multiple offers? And because we have seen some of that still in this market with really desirable homes in neighborhoods where homes just don't turn over that often. So you want to compete and you're thinking, okay, this home is $500,000 in this case. This is a Somerville home, $500,000. What if we offered $25,000 over ask price? Talking to Roni, would that help us get the deal? Roni would say yes or no, let's make the offer. This person did that. So they asked, so you want to know, is this smart? Because real estate is an emotional situation. It is also very it's your finance. It is your biggest financial investment. You want to make sure you're doing it smart. So by doing $25,000 over, you won the price, you won the house. It takes 13.4 months to catch up on the appreciation with our projected appreciation. So was that a bad choice to bid over ask? Not for this person. They're planning on being there 5 years. So they got the house they wanted because they were able to do it, and we were able to prove that it was a smart choice for this client. Now, if you're going to be there 6 months, that wouldn't have been the right thing to do. But if you're going to be there 6 months, let's have a different conversation.
That's right.
And then one other thing that we are really good at is helping you understand your mortgage strategy. So Roni said we work together a lot to help figure out what the offer should look like. So I run scenarios. So you can see this scenario is for somebody buying a $487,000 home. And I've got different loan amounts in here with different interest rates, because we're looking at how to use, should we get a seller concession, or should I just ask for a $10,000 reduction in the purchase price? The seller concession in this option here saves you a lot more than just the fourth column of a $10,000 reduction in sales price. So this is just how we can help you strategize and understand so that when you go out, you are that bulletproof buyer and you have the confidence to make the choice and know what you can afford and what works for you and your family and your budget. So that was pretty much the quick overview.
Yes. Well, Kellie, you do a great job. Thank you for all of your insight. And if anybody wants to ask questions, if they want to start the process, whether it's now or maybe you're not thinking about buying anything for a year, what kind of money do you need to have saved up? What do you need your credit score to be? Do you even know what your credit score is? So these are all instrumental, so that way you feel very well equipped. The worst thing that can happen is saying, okay, I'm ready to buy a house, and then learning that you actually need to clear something from your credit, or you need to wait a few more months to build up some additional cash on hand to be able to purchase what you want. But now you're faced at the end of your lease, and now your lease is going up. So we just want to position buyers to where they have the knowledge, so when the time is right for them, whether it's today, 2 months from now, or a year from now, they're well equipped. So thank you for sharing all of that. We can help you become a bulletproof buyer. Let us know how to help. This is our contact information. I promise you, Kellie and I both answer our phones. That's why we stay in operation. It kills me when people say, well, I tried to call 3 agents and nobody answered their phone. I know, I get it too. I'm in conversation, I try to reach out to some other agents and brokers and mortgage brokers and all, and they too are, it's a challenge trying to communicate with them. I can assure you that Kellie and I, we work hard, and we will use our best energy to your benefit if you will allow us to do so. Have any questions? Don't forget, pop us a message over and we'll reach back out to you. Okay. Thanks, Kellie.
Thanks.
Bye.
Bye.